Today we're going to focus on the main participants in the Forex market. Why is it important for you to know those against whom you are confronted? You need to know your opponents to elaborate the best strategy for the best probability in order to get the best benefits. Hello to all COF students! I am Marie-Litovinas Vegis translator, and it is with great pleasure that I will teach you the basics of Forex. Before starting the adventure, it is important to remember and remind yourself often of this sentence: I am and I remain a student. We are going to repeat this often to you to remind you that you are a student learning a skill that will serve you, be useful to you, and will pay you for the rest of your life. It is important to take your time and go at your own pace. Always keep a winning mind frame and you will succeed in the Forex industry. After finishing this video, you should have a very good understanding of the following questions. Feel free to pause the video to take notes and remind yourself, everyone is progressing at their own pace, and do not compare yourself to others. Let's start now with the main players in the Forex market. They are the ones who cause the price changes of a currency, who configure the exchange prices, and more than 80% of the transactions on the Forex market are made by them. The 20% remaining transactions correspond to those made by particular traders who barely represent a real impact on the market. So who are these big players in the Forex market? Let's start with central banks and the government. Central banks are the most influential in the Forex market. The monetary politics of these banks describes the vision of the country's growth. It is very important to know the inflation, the deflation, and their position on the interest rates. The interest rates are what determines the country's monetary mass and its exchange rate on a global scale. So when you're going to do a trade, we advise you to analyze the economical news around the world and to pay particular attention to the latest news with a strong impact on interest rates such as the FOMC, GDP, CPI, European Central Bank decisions, and the unemployment rate. Because unlike the individual traders, central banks do not do trading to make a profit. They have different goals. For example, the Bank of Japan must keep the value of the Japanese yen low because the Japanese economy depends on the export of Japanese products. Other countries will not order products coming from Japan if they were too expensive. So when the value of the yen rises, Japanese banks buy more currencies against the yen in order to lower its value. As you see, this has nothing to do with profit, because in this case they would have suffered a significant loss. This is just one example amongst many others that shows that central banks play a role in the government's monetary objectives for particular countries. Another major player, commercial banks and financial institutions. Banks are involved in exchange operations for many reasons. They can be for commercial transactions or for personal use. They process a large amount of foreign currencies. It is one of the main players, the interbank market. It is composed of main banks we all know well: US banks, Wells Fargo, JP Morgan, Barclays, USBC, BNP Paribas, etc. etc. These are the players that provide the most volume and that makes the market evolves the way it does. It's important to know this because during holidays and certain seasons like the summer, the market is not behaving normally, and this is not the best time to trade. In fact, it's the worst period. With such an important player out of the market, trends and movements are weak because they are the ones that maintain the momentum of the market. In other words, when they are on vacation, you too must go on vacation. Another important player, hedge funds. Any major company or business will be dealing with hedge funds because their role is to protect them from significant losses of money in the foreign trade. For example, if a company wants to start a project where it would take a few years to order some parts, now it will be able to get these pieces at a given price. But in 1 year, the price may have increased if they have to order these pieces later. It's the role of the hedge fund to create a contract that will allow businesses to buy pieces at an agreed price for later, in order to save money now on the long term. These companies allow large companies to of foreign trading by exchanging their money for foreign currency to make business in that specific country. Another major player, speculators. They play a major role in forecasting trends to make profits. These are investors who take risks with expertise in the markets. Too many people want to enter the forex market and trade 50 different pairs. Limit yourself to a few and become an expert on these pairs. These investors are called speculators because of their tendency to predict price changes in the most volatile sections of the market. They believe or predict that a high profit will happen, even if the indicators of markets may suggest the opposite. If a speculator thinks that an asset will increase in value, he may choose to buy as many assets as possible, which will increase its price, and vice versa. One of the most famous speculators is George Soros. He sold short the sterling, which earned him his first $1 billion in less than a month. Selling short means he sold everything in the pound sterling. We also have Nick Leeson, who was a trader at Barings Bank in England. Because of his incorrect speculation on the yen, he lost more than $1 billion, which led to the collapse of the company. Speculators work in special departments for big banks' customers. These are the departments that take your hard-earned money placed at the bank, which puts it on the forex market and then increases it, paying you a rate of 1% per year. These speculators work for the bank. This means that when the bank is closed, they do not work. So when a lot of the players who are moving the market are missing, then you just do the same. Take time off when they take time off. And finally, another market participant, private traders and independent investors presenting about 20% of the market movement. Investing in the forex was the exclusive privilege of an elite group of hedge funds, investment banks, and multinational corporations. These institutions keep fiercely their territory. Between 1990 and 2006, investments returned 9% per year, more than bonds or shares during the same period. For individual investors, forex was largely out of bounds. A minimum of $1 million was needed to do trading, and there was a lot of complex legal documents to review and sign, as well as a thorough credit check. In the last 10 years, all this has changed. Serious to the trading system online, it is now possible to particular investors to have access direct to the currency market and to trade easily and quickly on the international forex market from any internet-connected media anywhere in the world. Many people come into the forex market thinking that they can predict the market and what it will do. You cannot predict the market. Your job is to find the trends that appear and to follow them closely. Go ahead, go past them, but do not try to predict the market. Now you should be able to answer and understand the following questions. Read them and answer them quietly. As soon as you finish, go to the next video and remember, you are and you always remain a student.